qui con William de Vijlder, vicepresidente di Bnp Paribas IP. Good morning, Mr. de Vijlder.
Hello.
Well, where are the fish in this period? What should investors do and where to invest?
Indeed, the idea of where are the fish reflects the question where are the attractive investment opportunities, considering that markets have moved up a lot over the past couple of years. We still see attractive opportunities from a valuation perspective in European equities, in emerging equities, and also in emerging market bonds.
Okay, and what do you think is better, developed economies, or do you think emerging markets are still well performing?
Developed economies are doing better on the economic side. That is also the reason why developed economies' stock markets have also been doing better than emerging stock markets. That has been the case, this outperformance of developed compared to emerging for a couple of years now. That also means, though, that to the extent that we would have some positive news coming from emerging markets, that we would then start to see a comeback, a kind of an outperformance from emerging stock markets. And for that, it is important to look at, of course, the evolution of earnings. That is quite obvious, but it is also important to look specifically on how exports are going. Exports of emerging markets to the developed economies is going to be the kind of a trigger which will bring more investor confidence to these countries and which will see then an outperformance of emerging markets compared to developed.
Okay, and what about Italy in particular? What do you see for this country?
Well, Italy has been doing very well, of course, on the stock market, and that is because of the market buying into the political change and based on the hope that now things are structurally going to change in terms of the way economic policy is set at the level of the government. So what investors really want is that they want to see that these hopes are now also validated by the delivery, by what is being achieved. And let's not forget that every single country in the euro area has as a challenge to boost long-term economic growth rate. I would argue that in Italy that is also the case, considering that between 2000 and 2007 economic growth in Italy has been rather slow, so that means that the challenge is very clearly there. Equity markets are buying into the view, so now we have to deliver in terms of economic policy.
Okay, thank you a lot.
You're welcome.